All right, AT&T is one of those broadband providers, but they've got bigger issues on their hands. If there were any question as to whether the Justice Department's move to block that AT&T Time Warner deal were political, well, this may help clarify for you. The lawyer who worked on both the Reagan-era Iran-Contra affair and the Clinton-Whitewater case way back in the 90s has just been assigned to hear the Department of Justice's case against the controversial merger. District Court Judge Richard Leon will be tasked with deciding if a link-up of telecom giant AT&T and HBO parent, of course CNN parent Time Warner, would hurt competition. The man we were just talking about, FCC Chair Ajit Pai, had said earlier this year he didn't see any problem with the merger, but has since done a 180 as President Trump, who put him in the position as chief, continues to tweet and say he's against this merger. As AT&T gears up for this epic battle, major banks that hoped to underwrite the deal are already taking sides. Charlie Gasparino on what has to be panic on Wall Street over this suit.
Massive panic for investment bankers, both on not knowing how to interpret the antitrust laws, but also how much money they would lose. But we understand the losses will be staggering if this thing doesn't get through. That's staggering investment banking losses, something like $300 million in investment banking losses if this thing doesn't go through. The biggest losers will be Allen & Company, Citigroup, Morgan Stanley that represent Time Warner. Other big losers will be Perella Weinberg, which represents AT&T, could lose something like $30 to $50 million. That's Perella Weinberg is a boutique investment banking firm. They could lose $30 to $50 million if this thing doesn't go through. They represent AT&T along with JP Morgan and Bank of America. Perella Weinberg is the lead underwriter of the deal. That's why they take most of the losses. Allen & Company is the lead underwriter, is the lead advisor for Time Warner. That's why it takes most of the losses there. And, you know, Liz, this doesn't count the amount of losses that will be taken from arbitrageurs. What happens is before any deal like this gets done, when it's announced, Wall Street firms take trading positions. They buy one, they sell the other, or they short the other. What you saw was a lot of buying of AT&T. Why was that? Because as you said, the FCC commissioner initially said this would be a good deal. It would probably go through. The Trump White House, despite Trump's own animus to CNN, wanting a spinoff of CNN, thinking this whole thing was too much concentration. The word coming out of the White House from the DOJ's antitrust division initially was positive. Right. So people bought AT&T stock, thinking it's going to go up and hit the level it was that they bid for, hit a higher level. Or, excuse me, bought Time Warner stock, thinking it would go up to the level that AT&T bid for it, and they sold AT&T stock. Now, just the opposite happened, as you know. That's today's action, but as you know, when this thing first happened, shares of AT&T went up, shares of Time Warner went down. And if this does not happen, it's going to go down more, and AT&T will go up more, and that will really hurt Wall Street trading desks. So what we have here is a twofold problem for Wall Street, or threefold. Number one, they don't know how to interpret the antitrust laws for deals. Number two, they're going to take huge losses on the fee side, and I just laid it out. Something like $300 million split among all those firms. We should point out that most of those firms did not get back to us. Perella Weinberg had no comment. JP Morgan had no comment. And the third part, Liz, is the trading losses on the arbitrage play, that you buy one, you sell the other, thinking the deal will go through, and just the opposite happens, and that catches you in the middle. That will be on ARB desks, and that will be from hedge funds.
Let's just say, though, that these commissions are tasked with keeping customers fairly treated, and that there is no anti-competitive behavior. But again, AT&T is in the delivery business, and Time Warner's in the content business. And the fact that Ajit Pai had said back in February, I don't even think this is going to come to my desk. I don't really see an issue with it. Is really interesting.
Well, you know, there's a story I laid out today. There's a story I laid out yesterday, which we're in like another realm here. Listen. The last time I remember a president getting involved in antitrust, saying we may go after my enemies in the media, was Richard Nixon. Yeah. Let's be real clear here. I mean, we're talking Richard Nixon, and now you have the Trump administration going after this on a deal where, you know, if you look at it from the merits on a legal standpoint, it doesn't seem like antitrust. But anyway, there you go. There's a little historical perspective. Anybody out there that wants to know about this, Google antitrust and Richard Nixon, and you'll see what I'm talking about.